Hello, welcome to a little episode here of Real Rich Advice. It's been a little while. We're here to give you a little bit of a market update. Obviously, things have changed a little bit since the last time we've talked.
Just a little bit, but the market is still moving.
Absolutely. So interest rates are on the rise, and people have asked, so what have interest rates done to the market, and have they had an effect? And the answer is absolutely no. Yes, they have had an effect. So interest rates, what we've noticed is as rates have gone up, obviously it's pushed the pricing a little bit downward. But I think it's actually more of a healthy market because we're seeing a little bit less of these 10 offer transactions where more buyers and sellers are winning because transactions are taking place versus when we had 10 offers on a property, one person was winning, a buyer was getting a property, and 9 people were leaving unhappy.
Yeah. So in the last 10 days, we've had one seller sell their property, and we've also sold to a buyer. The buyers are out there. As Jordan just said, the market is definitely moving at a different pace as affordability has impacted lots of people. I've been doing this for a long time. As many of you know, I've been doing this for over 30 years. And what I have seen in my career is that the market adjusts. Consumers adjust. They'll get used to the interest rates being a little bit higher. That takes some time, but the market continues. We're in a very good place for real estate, the Washington, D.C. metro area.
And of course, we're relatively insulated because a lot of our economy here in D.C. is either directly or indirectly funded by the government. And so that keeps employment up and a lot of money moving through our economy. And so we don't see necessarily the slowdowns that maybe you're seeing in Colorado, Arizona, Florida, some of the other markets in our country. But it's also part of the reason why our pricing is relatively high is because investors and other people have looked at the financials of Washington, D.C. and the forces that support the market, and they view it as a stronger market. And since the risk is a little bit lower, obviously the price is a little bit higher, and we have a little bit more stability. So let's talk a little bit about what we're seeing if you're a buyer in the market, how the interest rate has changed your payment, and what is it doing to change the process as far as inspections and those sort of things that were before, and where are we now?
So we are absolutely seeing a different situation for buyers. Back when the market was moving at a faster pace, oftentimes people were doing what were called pre-inspections, which were sometimes very fast inspections before they'd write an offer. Now they're writing offers and they're given the time to do the inspections and do a little bit more thorough investigation of the property that they're interested in acquiring. And as Jordan said, we're not seeing 5 and 10 offers on listings, but we are seeing, and you dealt with one last week, where there were multiple offers. So it really depends on where you are and what you're looking for in the market. The interest rates, there are some buyers that unfortunately have either had to step to the sidelines, or what they've had to do is adjust their pricing. And when interest rates go up, because their payment can be significantly higher, they are forced into buying less expensive properties. But they're still buying. Again, not at the pace that we saw over the last couple of years, but it's still moving.
So when we talk about mortgage rates, there are obviously some ways to combat the mortgage rate increase if you're both a seller or a buyer. Let's talk a little bit about mortgage buy downs and different loan terms as far as ARMs versus conventional.
Yeah, well, that's also what we're seeing now is adjustable rate mortgages are becoming more popular because the adjustable rate mortgage is lower than the fixed rate. And also, again, doing this a long time and own several pieces of real estate in my life, a lot of people want to get 30-year fixed rate mortgages, but I ask you, how many times have you refinanced your property? Most people refinance anyway. So yeah, when interest rates were really, really low in the last couple of years, those were great times to get 30-year mortgages. But now we're seeing people get the adjustable rate mortgages knowing they're going to refinance, and they'll take advantage when the interest rates eventually drop down a little bit.
And then with mortgage buy downs, what we're seeing is obviously with rates being higher, there's a little bit more pressure to pay some fees up front, points, quarter point, half a point, full point, to reduce the mortgage rate. We're seeing buyers do it sometimes when they're thinking that they might be in a property for a long term and maybe a little bit more anxious about having to refinance in a couple of years, so they're going to lower that rate now. They also may lower the rate just to make the payment a little bit lower today. And then we're also sometimes seeing sellers offering mortgage buy downs as a way to get people to purchase the property versus reducing the price. And so you can actually buy the mortgage down maybe for 1%, let's say on a $1 million loan, that's $10,000. That sounds like a lot, but sometimes that $10,000 can equate to $30,000 more in purchasing power for a buyer. And so although you put the $10,000 as a seller, you quote, lose $10,000, it's less than losing 30. So it's a net gain of 20. Obviously, we can go into that math a little bit more in depth when it's necessary, but that's a little bit of insight about how, as a seller, you can influence a buyer's decision to purchase by modifying their interest rate and making you actually net more and the buyers paying less monthly. It's really a win-win.
Absolutely.
So that's a little bit about what's going on in the market here in the fall market in Washington, D.C. in 2022. We obviously have an election coming up that's bound to shake things up a little bit, both with new buyers and sellers entering the market, as well as possibly new economic stimulus and other packages coming through in the legislative bodies. So we hope you enjoyed it. If you have any questions, drop us a comment below, shoot us a text or an email. If there's a topic we have not covered yet that you'd like us to cover, we'd be happy to, and we'll talk to you next time.
Thanks for watching. You didn't notice I got taller. Just because I'm older doesn't mean I'm not growing.
And what, just because I'm married, I got shorter?
Yes.
I didn't realize that's what staging was for.